Welcome back to BLOCKTV. It's time now for Links in the Chain. And working in the still new and ultimately somewhat elusive crypto lending space, LendingBlock is an open exchange for institutional borrowing and lending of digital assets. And they have just received their full license as a distributed ledger technology provider from the Gibraltar Financial Services Commission. And to break down a little bit about their industry and what they're doing, now I speak with Steve Swain, CEO of LendingBlock. Steve, thanks so much for joining us.
My pleasure. It's great to be here today.
All right, so Steve, just to start things off for our audience, can you explain a little bit about what this license really means for LendingBlock and what potential it could have for you guys in this financial lending space?
Well, look, we are very pleased to receive the endorsement of the regulator here in Gibraltar. It was important for us from day one of starting our business to work towards becoming regulated, because we think it's an important part of the future of the digital asset economy. Not important just for us, but also for many of our clients we have today, and the ones that we expect to be coming into the economy over the next couple of years. So having worked here in Gibraltar to get the license approval that we now have, we feel very well positioned to launch our product to market.
Okay, so that's an interesting point that you raised just there, talking about the clients you wish to have into the future, because it's something that you guys have made a specific point of talking about, that your focus is more on the institutional investors rather than the commonplace retail investors. Can you talk a little bit about that strategy and why you think that's critical to LendingBlock's business model, firstly, and for the crypto sphere as a whole?
I think in the crypto sphere, there are different types and flavors of lending, just as you have different types of flavors in lending in the more traditional economies. So we don't believe that one type of lending is the only type of lending. We're not trying to be all things to all men. We're very clear that we are focused on the institutional market. It's a market that we know and understand very well, and we're very pleased that many of the other projects that are retail focused, we actually are fortunate enough to count as clients. So we see that there's a good synergy between the institutional focus that we have and the lending focus to the more retail market that other people are doing and doing very well. So our focus is 100% institutional, and institutional players, both the current ones and the ones that we expect to see coming into the market, have a very different attitude and very different need for regulation than perhaps is the case in a retail market.
Okay, so I mean, you wouldn't say that you're trying to compete directly with, for example, BlockFi or Celsius Network or other sort of similar crypto financial services that exist at the moment, given they tend, at least outwardly, to be more retail focused than you guys are aiming for. Is that correct?
That's right, and I think there's room for both models. So I think the retail market is a very good one. It's not our market. We're 100% institutional. And we understand that market, having worked in the equivalent in sort of more conventional equity and debt markets, and understand what the needs of institutions that have their own regulatory requirements are. And it's very different than dealing with a retail customer base.
So, I mean, you talked in your press release about some of the scale of the institutional investment market, you know, talking about trillions of dollars of assets on loan and generating billions of dollars in revenues in the traditional market. But do you think, or rather, what do you think the potential of the crypto financial services market really is, given the size of the market now and sort of your projected growth looking forward? What do you see the competitive edge being and the size being?
Well, I think it's certainly informative to look at conventional securities lending markets and to use that as a benchmark for what might be possible in the crypto market. So if you take the US stock market, about 1 in 8 shares at any point in time is being used in securities lending. So that would imply that if you could take that same ratio, 1 in 8 or about 12%, and apply that to the scale of the digital asset market, it's still a very meaningful one. But we're really at the very start of the beginning of the emergence and maturing of that process of that market. We think it's going to take years to reach that scale, but we're very confident in the ability to grow not just our share of the pie at the current size of the market, but in the overall growth of the market as more and more money comes into the asset class.
Do you see any particular challenges, any unique challenges, as it were, when it comes to crypto assets as opposed to the traditional markets? And in what ways are you attempting to overcome these sorts of peculiarities?
I think the challenges are the ongoing, perhaps not 100% consistency or clarity of regulatory treatment of some of the primary assets that we're focused on. But in many ways, we have great advantages that don't exist in other markets as well, in other asset classes. So we think there is swings and roundabouts with sort of some unclear regulatory situations that all participants are needing to deal with. But the transparency that we have and the ability to be able to settle trades very much more quickly is very much in the favor of the blockchain economy.
Now you have yet to formally launch your product, if my timeline is still correct. It's still upcoming. This licensing was a step on the road to full-scale launch. But I suppose I want to ask as well, do you have the client base there ready to go at launch? Or is this a bit of a build it and they will come model that you're building right here? Are you projecting for future growth, or you really have it already?
So we think there's a critical mass of clients that we need to have on day one. And we're in the process of onboarding people at the moment. So last week we got the approval from our regulator. This week our focus has been to getting that backlog of clients through our KYC and AML processes. But I think even the initial set of clients that we will have through the platform on day one is really just the beginning for us. And we think there are a good number of clients who are already active in the crypto space that will come onto the platform. But I think the more exciting thing is as more and more conventional funds start to see the viability of the asset class improved by the types of services that we're bringing to bear, that we really are still at the very early stages of institutional adoption. And we're very confident that that is going to grow consistently over the coming years.
But Steve, I mean, I still wonder, I guess I'm concerned, in some ways we see this narrative at the moment that institutions are the next wave that need to come on board if we're going to see that growth in the industry. But there is still a hesitation from many, particularly some of the bigger US institutions that are very wary of the crypto space, given the sort of confusion around regulation in the US, but also internationally in this sector. Do you think that those hurdles can be overcome to really get some of these more wary institutions on board in the long run? I mean, or will this just really take a very long time still?
Well, I think they can, and I'd go further and say that they are being addressed. So, we are seeing more and more regulated infrastructure providers like ourselves come and put into place the foundation stones that some of the bigger pension funds or regulated asset managers need to have in place to be able to transact in the asset class with the sophistication, with the confidence that they treat a debt or an equity product. So it is happening, just it's realistic to expect that it's going to take time though. So we're in it for the long haul. We think there is a good market with the existing set of crypto native institutions that are our initial target. But we're very confident that there is a much longer and potentially very large array of clients who are behind the first wave.
Are you concerned at all about the persistent volatility in the markets keeping some folk away, or do you think that could even be potentially a draw?
Well, I think traders historically like volatility because there's money to be made in those types of markets. What we've seen interestingly over the last 12 to 18 months as we've been preparing to launch is that lending has grown in both bull and bear markets. So we're very confident that there is a market for us whether things are going up or down. I guess the worst situation would be a market that was essentially stagnant with none of that growth prospect or none of that price action that attracts trading to the asset class. So we're kind of watching the asset class emerge, but we're not tied to a particular market outcome for our business to be able to serve customers in the way that we think is appropriate.
Well, certainly, it's all, as you say, an important part of building the ecosystem, building that structure around which you can get these institutional players on board and hopefully grow the market as a whole. We'll have to watch closely to see how that develops. But I want to thank you, Steve Swain, CEO of LendingBlock, for breaking down a little bit about this new announcement, new development in the institutional lending space for cryptos. It'll be interesting to see what happens into the future. Steve, thanks so much for joining us here at BLOCKTV, and stay with us at blocktv.com for all the latest in news and information. I'm Asher Westrop Evans. Thanks for watching.
more news and updates, follow us on Twitter.